Hello, everyone. Nice to see you all again. As some of you may know, I'm Zachary. I'm the head of client services here at Eadon and Co. So we're very pleased to introduce James Igoe, investment manager and head of the Manchester office at Redmayne Bentley. So for those who don't know, Redmayne Bentley, they are an award-winning firm offering investment management, financial planning, and stockbroking services. Also, coincidentally celebrating their 150th anniversary this year. So we've worked closely with James and Romain Bentley, particularly over the last few months, and lots of our clients will be invested in the portfolios that James and Redmayne Bentley have available to us. So it's really useful to be able to hear directly from someone like you, James, so our clients can put faces to names, particularly during times such as this. So yeah, thanks again for joining us and welcome.
Yeah, thanks for having us, Zach.
No problem at all. So really the thing we're going to talk about today is what's obviously been happening over the last couple of months or so. So as we've seen, markets have been particularly volatile during recent times. So can you give us a bit more insight as to what exactly has brought this about and whether there's been any recovery since the last time we spoke to you a month or so ago?
Yeah, it's been a really busy start to the year, Zach. I guess in context, just in the last 6 weeks, we've seen one of the biggest single day sell-offs in US stock market history. And this came on the 2nd of April, which was a sort of termed Liberation Day by Donald Trump. This was the day that a set of wide-ranging tariffs were announced. Within a week, we saw one of the best days in US stock market history, which is coincidentally also the day that some of these tariffs were actually relaxed. So it's been a really volatile time in markets in the short space of time we've had sort of in 2025 so far. I guess a couple of points worth kind of dwelling on are tariffs because they've dominated so much of stock market news so far this year. And really, I guess our interpretation of kind of what we see as the function of a tariff is the US imports so many things because it's cheaper for them to import than it is to make in their own country. And effectively, Donald Trump wants more things made in America. And if he can do that by taxing the things that are coming overseas into America, such that US companies become more competitive and they can make more things in America, and that's ultimately the end goal. And what that means from a stock market perspective is uncertainty, and we've seen lots of that just sort of in the last sort of 4 or 5 weeks, including the start of this year. But the example I'd cite is Apple. So Apple make a lot of the things that go into an iPhone are made in China. So if significant taxes were imposed on the stuff that comes from China into Apple, and Apple have to pay for that, well, that's a big cost burden for them to bear, and it's going to impact on their profit. And the stock market basically is trying to figure out how much profit a company like Apple will make over the very long term, and its share price is grounded in that. So if big factors like costs and tariffs change, on a sixpence, it can dramatically affect the share prices of companies like Apple and many others like them.
Yeah, that's really interesting. I think the thing that most of our clients will kind of be thinking at this point is how are our pensions exposed to this? I know we've got kind of a lot of clients using the Redmayne Bentley portfolio. So give us more insight as to how specifically our pensions and the clients who are using Redmayne Bentley might have been exposed to this news.
Yeah, of course, Zach, it's a good question. So the portfolio that we manage from Redmayne Bentley for clients of Eadon and Co. Has about 68%, a little over two-thirds, dedicated to conservative investments. And the purpose of that is really to sort of protect the portfolio in times of high stress within markets. So to give you some examples, within that sort of 68%, we would hold gold, money market funds, bonds, basically things that would I guess typically be deemed conservative. And what you're trying to achieve is a good balance for clients over the long term, so that in periods of high stress, the portfolio doesn't sort of spring about quite as much as what the market has been doing in some places. I guess another thing to mention is if you've got US investments or you've got investments in technology, clearly they've moved around quite a lot in the short space of time so far this year already. But what I would say is, just because you see that happening doesn't make a good investment a bad investment overnight. They are just more closely correlated to the emotion of what's happening and the sentiment. And that's kind of just something to be aware of. Yeah, kind of what we would say is we definitely want to monitor what's happening really closely. We're keeping kind of a really keen eye on things as they develop, because it is a fast moving market. And what we want to do is basically give the clients of Eadon and Co the benefit of our experience, and that's ultimately what we're trying to achieve with the way we put these portfolios together, and how we monitor them through periods like this.
Yeah, I think that's great. I think for all our clients, that's a really good reason as to why it's so useful to be able to lean on guidance from the likes of yourself and Redmayne Bentley. It's obviously important we can provide some good context to all of our clients to make sure they feel like they're being, well kept up to date with everything that's going on right now. Because it can be something that concerns a lot of people, but getting insights like this from you right now, we found that really helps our clients to understand that this is a normal part of investing. And as we've seen, as we kind of alluded to before, there has been a little bit of recovery, hasn't there, over the last few weeks or so?
Yeah, exactly right, Zach. So yeah, it's definitely been a busy time. As some of the tariffs became relaxed around the 8th of April, markets responded really positively to that. I mean, ultimately, markets don't like uncertainty, and the less uncertainty there is, the better markets will be. And I guess we kind of the way we think about that is, we expect volatility to remain, because there's lots of unanswered questions that are still to be resolved. But the way we think about this, especially for long-term clients, is what happens in the next days and even weeks is slightly less relevant. We're more focused on what happens in kind of the years to come. So kind of as we look forward, that's what we're trying to achieve for clients. Kind of what portfolios and what markets may look like in years to come, and we want to build them kind of cognizant of that, really. So I guess balance is definitely appropriate, and we keep a really keen eye on that. But we also want to maintain exposure to long-term themes like artificial intelligence, which we think are going to be kind of really sort of life-changing for investors in the years to come. And kind of that's one of the themes that we want to kind of remain exposed to for clients of Eadon & Co as well.
Yeah, I think that's great. And something I just thought of there really is obviously there's been a bit of a dip over the last few months, but the way we talk to our clients now is, like you say, we're kind of not looking in the short term of what's going on. We're looking more towards the long term of what's happening over the next few years. And history's always suggested in the past that things do recover. So it's about, kind of being patient and just biding our time a little bit at the moment. But yeah, thanks very much for that, James. I think the main thing for us and our clients to take away is actually it's now just a really good time to trust us and the processes that are all in place. As you can see, we're consistently speaking to people like yourself who've had a whole load of experience navigating these kind of phases in the market before. I'm sure you'll have seen similar periods of volatility many, many times, and it's obviously important for our clients to know that we lean on minds like yours and Redmayne Bentley, so they can be reassured we're listening to those who have lots of experience in how to get through these kind of periods in the best way. And as we can see already, hopefully things are starting to look a little bit more positive. But as you kind of mentioned, we're still looking at the long term goals. So yeah, I think that's everything from us for now. But thanks again, James, for your time today. I'm sure we'll be catching up again soon. So take care, everyone, and see you again. Thanks very much.